last quarter has seen some rumblings under the surface of the winners so far in equity markets this year. The rotation into some more higher quality names that have been a little less richly valued than the artificial intelligence names has been strong for sustainability related investments. Those types of funds that we have in the portfolio, like the Nomura Fund and the Reglan Sustainable Water and Waste Fund, have been strong. However, the vast amount of uncertainty in markets, which James spoke to, has been difficult for the longer term focused solutions providers within the portfolio. The impact focused equity names have struggled as political uncertainty's taken hold, and there's less foresight in terms of what interest rates are going to look like in a year, inflation in the next 3 months. On the flip side, these very market forces which are causing such uncertainty in the equity market have fed in quite nicely to the bond market and also commodities. Within the Sustainable World portfolios, we have a small allocation to a gold strategy, which focuses on responsibly sourced bullion, which was mined after 2019, and to the high standards in association with the Royal Mint. For us, this hits that perfect blend of sustainability credentials and being ethically sourced, as well as having strong financial returns and hitting that part of the portfolio that provides real diversification to the waning equity market. Also, bonds have performed fairly well in recent months. We've seen interest rate cuts being priced into the market, which has been strong for the impact-focused bond funds that we've been looking at. The use of proceeds of these particular issuances been used for positive environmental and social outcomes. But also, they've been behaving similarly to traditional bond investments. Furthermore, the investments we have in green infrastructure have started to perform handsomely. The new Labour policies putting green investment back at the top of the agenda, with interest rate cuts starting to be priced in, as well as the steep discounts that these assets were trading at relative to their long-term value. It's started to really come through as a strong performer for the portfolios. Lastly, our fixed income exposure has started to really return its diversification credentials and its strong performance to balanced, cautious and defensive portfolios. With interest rate cuts on the horizon, these funds are starting to perform really well as having really strong environmental and social credentials due to their use of proceeds investment structure. Looking forward, we believe we are very well diversified with some high quality long-term equity positions in the portfolio, complemented by gold bullion and fixed income, as well as some infrastructure plays to bring a portfolio that we believe is very strongly positioned for the next leg of markets.